Ever wondered what your home looks like from space? Enter your address and get a 360-degree satellite.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Man, when I tell y'all that this doggone Zoom had me in 3 headlocks this evening, man, I'm talking about, man, this Zoom that had me in 3 headlocks today, man. That had me in 3 headlocks. Let me man, I'm trying to get myself together. I just woke up, man. I just woke up a few minutes ago, and it's Friday. This football game start at 7. I ain't in no big rush to go cause my football player done graduated high school, so he don't play football no more. My high school junior, he's in the band. The only important time for him is halftime. All of that playing in the stands, so as long as I get there by halftime, I'm all right. You feel me? Let me copy this link. I don't know if I want to put this link on YouTube. I got it set to I have to let you into the Zoom. So I got it set so that I have to let you into the Zoom. So
You know what I'm saying? We shouldn't have to worry about no foolishness coming in because I got to let you absorb. So I got a link. Oh, good evening, good evening, good evening, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you don't hablo Espanol. And you're tuned to another episode of the Intraday Price Action Recap. Now, if you was privy to the introduction, or if you saw the introduction, if you caught the introduction, you will know that this introduction is being brought to you by the Smart Money Manuscript. The Smart Money Manuscript is your one-stop shop for everything that I've ever discussed on my U of the Tube page. Right. Tomorrow morning at 11 a.m. Right. We will be, let me share my screen with you all. Tomorrow morning at 11 a.m., we will be having our very first monthly Q&A session inside the Smart Money Manuscript. Now, if you go to the sales page of the Smart Money Manuscript, you will not see anything about monthly Q&A sessions that's offered with the course. That's just a above and beyond thing that I like to do because I don't believe in giving somebody some information and just leaving them out there on their own to like fend for themselves. I like to be taught in a way where it's kind of like hands-on, where I can ask my own individual questions about the recorded material. So as a bonus, I will be doing monthly Q&A sessions on the first Saturday of every month at 11 a.m. Right? It is driven by you. If I pull up at 11 and nobody's there with questions, hey, I'm out of there. If I pull up at 11 and we got people in there with a healthy amount of questions, we sit there for a while answering questions. No harm, no foul, right? But Smart Money Manuscript, this is the course here. It is, you see it here, it says 5 chapters, 40 lessons, 2 hours and 28 minutes, right? It's broken down into, it's modular, right? It's broken down into 4 phases, right? Each phase has different chapters inside of it. You have a video with a lesson, a lecture, if you will, and you have a quiz about said lecture, right? Phase 1, 2, 3, 4. Got everything in there from basic introductory. I've never heard of anything dealing with money all the way through advanced day trading, swing trading, long-term investing, like price reading ability to be able to make intelligent trading and investment entry and exit points in the market. Right? That's what it walks you through. But just the course itself is not going to make you a effective trader. It's not going to make you an effective investor. It's not going to just make you just be the next Warren Buffett, right? That takes time, that takes experience, and that takes mentorship. And that's what the monthly Q&As are for, to answer those questions that you may have pertaining to the educational material that you learned, right? And tomorrow, if you have the course, you'll see monthly Q&A schedule, right? That's where the Q&A schedule will be, our first one. September 13th at 11 a.m. Location, live stream channel. What is the live stream channel? SMM Live, right here. You come into your WAP app, right? If you're on a device, open up your WAP app and go to SMM Live tomorrow at 11 a.m. Eastern Standard Time. And this is where we will be, right here. You will see me right here, right? I'm going to be on there with my camera. My camera is pointing at the wall down there right now. If I turn it on, it might be turned off. Oh, yeah. Is it turned off or is it pointing at the wall? Yes, pointing at the wall. Right. You'll see me like this. So you'll see me inside there tomorrow. And we will be answering questions if you have any. Right? Now, that ain't why y'all came here. Y'all came here to talk about the intraday what just happened. Oh, my bad. Hey, y'all. If Price did anything today that caught you off guard, there's a link pinned to the top of the chat over there inside YouTube. You can click on that link and come over here and join us in Zoom, and you can unmute and ask a question that you want to ask about what Price did today. Who we got up in here? We got Deborah up in here. What's going on, Deborah? Bugging me, talk about let me in Zoom. We got Erica up in here. What's going on, Erica? We got Yolanda up in here. What's happening, Yolanda? How you doing?
What's happening? Stop using my voice. Hey.
Who using your voice?
People, I got people in here, and they be covered up trying to sound like me.
Okay, you trying to come on here and act like you got some sense today. I appreciate that. Shout out, hey man, I've been trying to shout out Yolanda a couple for a while now, but she usually don't be here. She be somewhere cussing out soccer coaches, right? So the reason why I've been trying to, why is this doing that? Yeah, hold on. When did I stop sharing my screen? Anyway, what I was trying to say was, shout out Yolanda, man. I saw several people that signed up for the Smart Money Manuscript that had the same last name as Yolanda. I don't know if those are her personalities that's signing up for the course, or if those are family members signing up for the course. But either way it goes, I appreciate her for spreading the word either to all of the voices in her head or to her friends and family. Well, family, because they got the same name. All right. I appreciate you.
You are welcome. You are welcome. See, now you're gonna have people think it's voices in my head for real.
Sometimes letting people have the ability to unmute just works against you. But it's all love. Hey man, we family over here. It's all jokes. I'm the biggest troll on Al Gore's internet, so you can't take nothing I say serious unless I'm talking about price action. Right? I'm always making a joke. Always making a joke, right? Now, oh, Jim, what's up? Marco, Lump up in here. Kim up in here. What's going on, Kim?
Up in here after a 5-minute wait, but I'm up in here.
Look here. If your homeboy Yank Master Flex stop pulling up with the foolishness, you won't have to, you know what I'm saying, sit in the waiting room.
Hold on, what's his name? Yank Master?
Yes, if Yank Master stopped pulling up in here with the foolishness, then you know what I'm saying, you wouldn't have to wait. You feel me? Coming up here drawing swastikas and writing the N word all over the screen and showing people his, you know what I'm saying, his what you call it? His limbs.
Eggplant.
Showing, yeah, he's showing people his emojis, showing people his eggplant emoji, and listening to some dude call him a F word. Mass Manza, he's a dang on. What's up, Kim? We got Rhonda up in here. Hola, Valentine. We got Here to Learn and Share up in here. I'm trying to figure out how Here to Learn and Share got the #1 top fan, and she was like the 4th one to make a comment. Kim was the first one to make a comment, and she got #2. And Rhonda was the second one to make a comment, and she got #3. Hey man, I by show of hands, I want you to actually raise your hand. By show of hands, who saw the class participation that I shared today? All right. And then if you saw the class participation, did you study it? Mm-hmm. Deborah say she saw it. Deborah say she saw it. Here to Learn and Share said no. Stop the cap. I noticed that ES was much stronger than NQ yesterday. All right. Lump said he saw it. Lump raised his hand. Lump said he saw it. Here to Learn and Share said, I noticed that the ES was much stronger than the NQ yesterday. Today, NQ was stronger. Yeah. Okay. All right. Thanks for sharing. Somebody said it was at the W2, so they ain't see either. All right. Erica say I didn't see it. Okay. I didn't see it. Didn't see it. I wasn't expecting anything from you today. You said you would be out. Yeah, I was out. I had a long day, man. That's why I was just sleeping. I had a long day today, man. I was ripping and running all day long. I didn't walk back in my door until 4. Let me see what time. What time did I post this in Discord? What time did I post this link in Discord? It says I posted this link in Discord at 5:17. That means I didn't get back in my house until right around 5 o'clock. Might have been a little bit early because I was at my son's school at like what time that was? You called me showing off your haul. What time?
I think maybe like 4:30, probably after 4.
Yeah. Okay, yeah, because I was at the school because you were like, why ain't nobody answering the phone? I was like, I just walked back to the truck. I was putting Chris stuff. Speaking of Chris stuff,
Yeah, that was right at 4:32.
Yeah, it's still in the back seat of the truck. Right? I forgot to get it out of the truck when I got home. His book bag and his clothes and stuff. Hold on, Yolanda, I already let you in. How I'm trying to let you in twice.
Uh-oh. That might be the master debater.
Yeah, that's Yank Master Flex. Yank Master. I wasn't expect. Oh, I saw that right there. I saw it, but I was working. Yeah, so that mean I got home like it was probably right around 5 when I got home then, cause if I was still at the school at like 4:30 or so, and then by the time I drive home, yeah, so it was almost 5 when I got home. Cause when I got home, I came in, I set up the live stream, and then I shared it in Discord, and it say I posted this at 5:17, right? And what's going on, Felicia? I Yolanda, why I see you in here twice? Why I see you in here twice, Yolanda, and it don't look different like it usually do?
Because I'm on my iPad and then I get on my computer so I can really see your charts. Normally I'm on my phone out at the soccer field, having words with people, remember?
Yeah, yeah. Cause I know that one when you be at the soccer field. I know what that look like. That I know what that little icon look like. Hey, let me share my screen. All right. For those that got more excuses than at a and then at a who funeral. For those that got more excuses than going to jail. If I go over here to not screenshot. Oh, you know what I just noticed? Oh man. See, this how busy I was. This how busy I was. Where's my phone? I just noticed it was like I had another screenshot that I was sharing with y'all in reference to that. See that Fibonacci tool that I got on there over here. If y'all can see up, oh, y'all can't see it because I'm blocking it. Right. That Fibonacci tool right up there that's on price. I was sharing a post about that Fibonacci tool that I never finished posting. I was doing it from my phone. I was riding around. I was going to pick up some food for my son. My phone must be out there. Anyway, that post was it was pretty much in a nutshell. It said that the Fibonacci tool is your best friend when it comes to looking for price projections, especially when you're at all-time highs. Right. And I was going to share that for you all to go in and study price, study like how I had it anchored and stuff like that. I had a screenshot of that's pretty much all it was saying, right? Quick question for everybody that's in here, YouTube or Zoom. Whenever I share stuff in the screenshots and in the class participation, right? Do y'all understand that both of these serve the same purpose, except for the class participation, right? I actually want to see your case study. The screenshot is just there for you to do your own case study, right? But you don't have to worry about sharing your results. That's why you can't type inside of the screenshots. You can only react, right? Because the screenshots, I don't want this to be, you know what I'm saying, cluttered up with people's answers or whatever. But the class participation, this right here is pretty much, it's the same thing as the screenshot, except for I'm going to lay out exactly what I want you to study about the screenshot that I put in here, right? I'm going to give you exactly what I want you to look at. This one right here is a little bit more guided. This class participation is a little bit more guided, meaning I'm focusing your attention on what's important inside this screenshot. and then I want you to go in and study it. Now, there can be other things in the screenshot that you see if you want to study. That's fine, right? But I'm just focusing your attention on what's important about this screenshot that I'm taking, and for you to go in and study that particular thing or those particular things. But the screenshots, I want you to do the same thing and go through your charts and study the fractal of price. Do everybody understand that? Right? Do we get that? Do we actually study the charts, or do we just look at it and say, oh, yeah, that's nice, and keep it moving?
Only time I study is with you online.
I know that. You could have stayed muted on that. I already knew the answer to that for you. I already knew that.
But that's like 7-8 times a week sometimes, you know. Working with 2 jobs.
Oh my goodness.
How many kids I got? 3, 4 kids and a dog.
Here we go.
You feel me?
My nephew just got like the shock of his life. He felt something in his spirit, and he said, my daddy lying somewhere. My daddy is somewhere lying, and fell on the floor. he was slain in the spirit of he was slain in the spirit from all of the lies being told. Hey man, let's look at price, man. Y'all out here hoping I don't ask y'all something that's gonna trigger me, and then I shut down shop. Everybody sitting around tight-lipped. Don't say nothing. You don't say nothing. ain't nobody see the post. Ain't nothing but one person respond, and they said they don't know to one of the answers. Don't get him. He done had a long day. He been running around town all day long. Sam's Club ain't even have his pizza fun. He was upset. He couldn't get that. He couldn't get a slice of that pepperoni and that cinnamon pretzel. Ain't no telling what he might do. Now he got to go out there and sit up in the bleachers and wait for halftime to come. You got to sit out there in the sun just to wait for halftime to come to listen to his son play Flight of the Bumblebee. Hey, how was y'all trading week, man? Was y'all trading week? Good, bad, flat, didn't trade? How was y'all trading week?
Mine sucked.
Yours sucked.
I'm just gonna keep it real, but it was ironically, like I say, you didn't even know, like you talking to everybody, but specifically to me, it was just like you said when you were talking about it. I think it was Wednesday. It's I am fighting the battle of the FOMO and not waiting for a complete signal and jumping in and then going down that trail of let me get it back. And it's like I had to finally step back towards the end of the week and just watch. But it was bad. And then when I finished trading, I'm like, you know better, but I gotta conquer this and be more disciplined. But that's just the honest truth of how it went.
And you know what? I'm gonna clap it up for Yolanda right now. Why is that? Because when I say stuff, right? She said, you talking to me? I ain't talking to you. I'm talking to little Timmy Rogers. I'm talking to the trader inside me. Why? Because these are the things that I've done in the past. These are the things that pop into my head right now to this day. Right? I'm a day trader. That's my job. Right? Let me go on full screen on this. Y'all just want to hear me talk about the charts, and y'all don't want to hear me talking, man. It is what it is, man. It's my channel. You can go somewhere else, right? Go sign up for a signal service or something like that right there. I done had a long day. I'm tired. I ain't the mood anyway. Look here. I'm a day trader. Tim, what does that mean? That means this is how I make my money, right? This is how I make my money. I appreciate everybody in the gang who signed up for the Discord, right? They pay their hard-earned money for like the monthly whatever the monthly price level that you signed up at. I really appreciate it, right? But the Discord ain't paying none of my bills, right? Discord don't pay none of my bills. I appreciate the people who use my Apex link. Apex don't pay none of my bills. Okay, well, Discord, I can't even pay. Yeah, Discord could probably pay my cell phone bill, right? It probably could pay my cell phone bill, but that's about it. YouTube ain't paying none of my bills. I can't pay none of my bills with YouTube. Affiliate links ain't paying none of my bills, right? All of them together, right? If I put all of those together, you know what I'm saying, I probably could pay my cell phone bill and maybe a light bill on a good month. On a regular month, I can't pay my light bill. I can't, you know what I'm saying? I might be able to pay.
You can pay for some of them slices of pizza you be buying. How about that?
That's it. That's what it's buying. It's buying the pizza. It's buying the pizza. It's buying the
the pretzels.
That's how. Yeah, the pizza and the pretzels. You know what I'm saying? The pizza and the pretzels, right? But I'm saying all that to say is this is how I make my money, right? And so when I don't trade, right, I don't have no income coming in, right? If I don't trade. So when the market gets difficult during the time where I'm sitting in front of the charts, right, I start to feel that pressure of I have to take a trade because I'm not making any money. You know what I'm saying? I start thinking about, man, you know what I'm saying? My mom, my kids, you know what I'm saying? I start thinking about these things when I like, if the New York session is not acting right, like, golly, man, I ain't took no trade in like 2 days. You know what I'm saying? Now I'm sitting back here during the Asian session trying to look for something, you know, waking up in the middle of the night, coming and looking at the London session, trying to see if I could find a setup. And then you know what that does? That opens up the door to um what's the term I'm looking for? Something bias. I can't think of what it is. Like that like you start to force stuff. You start to see what you want to see. You're not trading what you see. You're trading what you want to see. You know, and then the worst thing in the world that can happen when you do that is if you have a successful trade, because now you're fostering bad habits, right? You're fostering bad habits because now whenever you start to think like that again, you're going to be like, well, the last time I was able to get a 50-point trade on the NQ, made me a quick 1,000. When you know you was over leveraged, you know what I'm saying? You know you was over leveraged, but because you had that FOMO and you needed to get that trade off and it worked, now you think you're Superman, right? You think you're Wonder Woman. right? You're fostering these bad habits. And so when I talk about being patient, when I talk about things like let the algorithm do what it's supposed to do, right? The biggest complaint that you're going to find with yourself as a trader or any ICT haters is the fact that you have to wait for the algorithm to do what it's supposed to do, right? People want to take ICT concepts and trade them like it's a momentum thing, right? You can't trade ICT concepts like momentum trading. Momentum trading is how breakout traders trade. Breakout traders see price start to take off in a direction, and then they just try to grab it by the tail and hope the kite keeps flying. Excuse me. You can't do that with ICT concepts, right? Now, will there be a setup for you every time you sit in front of the charts? No, it won't. And you have to be able to identify where are we in terms of price delivery, right? Once you learn to identify that, then you have to work on being patient enough to wait for it to come to fruition. But what that's going to take is one, a good understanding of all the concepts. Two, right, being able to look at more than just this tunnel vision. I'm looking at the 1 minute time frame, the 15-second time frame, because people say this is the best time frame to trade, right? You got to understand time frame confluence. You got to understand PD array confluence. You got to understand if you're in a buy program, a sell program. You got to understand if the market is like being manipulated or about to be manipulated. You have to, it's like a lot of stuff you got to keep in your mind while you're looking at the charts. And then the most important thing is time. Is it time for you to be looking for an entry? Just because you want to see an entry doesn't mean it's time for you to be looking for an entry. Just because it's within the time window doesn't mean it's time for you to be looking for an entry, right? Because what's on the other side of that ampersand? Do y'all know what an ampersand is? Am I saying that word right? Am I saying that word right? Who's smart?
Yes, the and sign. Yes, that's right. Ampersand.
Yes. What's on the other side? You got time, then you got that little ampersand, and what's on the other side of that? What's the second half of that phrase? Somebody tell me, what's the second half of that phrase?
Price.
Time and price, right? So if it's the right time, but the algorithm hasn't shown you that it's interacting with the right price, something's missing, right? If it's at the right price, but it's not the right time, something's missing. All right. If it's the right time and the right price, but you don't understand where you are in terms of price delivery, something's missing. All right. Something's missing. And what's missing in that? And what's missing in the third example that I gave you? Your understanding, your knowledge, your experience, right? You may be done studied. You probably done been here with me ever since I started doing this, right? Ever since I started doing this, but you may be in the camp of you only really study the price when we're on live together, right? And then when you go in there and you're looking at the charts and you're trying to remember what we said on live, golly, what did Tim say? God, you probably don't go back and look at the price action and put in the work and actually journal it. You know what I'm saying? And then if you do go back and put in the work and journal it, you probably ain't did the work on working on yourself and not giving in to the FOMO, right? And then guess what? Right. When it comes to I was about to show something on the screen. That's why I got off full screen, but let me go back full screen for a minute. Everybody think, and me included, back when I first started trading, everybody think that psychology when it comes to trading is all about your emotions. It's all about, oh, we are emotional people. Oh, it's like we see something and we get greedy and we're trying to chase it, or we this and we that. Here's the gag, right? We are emotional creatures, right? We are emotional creatures, but think about it. When do your emotions get the best of you? When you're in unfamiliar territory. If you go somewhere and you don't understand the lay of the land, right? You feel uneasy when you start getting emotional, right? When you're driving somewhere and you've never been there before, right? That unsureness about how long it's going to take you to get there makes it seem like the trip takes so long. But when you're on your way back home, you be like, man, did we drive faster? No, look at your clock. It took the same amount of time coming back home. But the assuredness of understanding where you going made the trip seem so much easier, right? So when it comes to trading, you're not being emotional just because you're an emotional creature. You're being emotional because you're unsure about your strategy. You don't know if this strategy actually is a good strategy or not because you haven't back tested it enough. You haven't sim traded it enough, right? The first time you got on a bicycle, that's probably the scariest thing you ever had to do. But once you perfected riding a bike, you can ride the bicycle with no hands. You can ride the bicycle with your eyes closed. You're not emotional about it anymore because you understand through and through how to ride that bike. If you truly understand the probability of the strategy that you're using, you would not fear missing out because you know that's not my setup. If it was my setup, I would be in this trade right now. And then when you get into a trade and it's not your setup, you worry about the trade. And then if the trade goes against you, now you pissed and you want to get the money back. And then you start forcing other trades and you get angry or you get upset or you get anxious or you get whatever, right? And it's all stemming from the unknown. I don't know if I can get this money back because I don't have a strategy. I've taken money away from my family with this loss on these stupid markets that people on the internet say I can make money from, but I keep losing money, taking money away from my family, and I don't know if I can get it back. It's that uncertainty, that unknownness. That's what is messing with you psychologically. But if you take the time, right? Now, it's going to be hard, right? If you're a person like me. But if you take the time to understand the concepts, work on one strategy, back test one strategy, and get the probabilities of it. Once you back test that strategy and understand, okay, this strategy is 75% effective, whatever your percentage is, right? After you go through plenty of trades, I can't give you a number to say, hey, this is enough. I don't think that exists, right? Because people be like, how long I got to back test it? How long I got to trade it? How long I don't know. Just do it until you got enough data to say, okay, this is a big enough test set to give me some reliable data, right? And then practice using that one strategy, right? And do it over and over and over and over till you see the setup coming like it's second nature. You're like, oh, this is my setup. Price did this, and this. I'm gonna push the button. Price did this. I'm pushing the button. Price did this. I'm pushing the button. However many, you know what I'm saying? Right? You got it down to the time of day, the time frames that's got to do things, right? The liquidity, the imbalance, the breaker, whatever your PDub chart, you got everything down to the science. And when you see it, you push the button, right? You know how many days of the week you can expect it to set up based off your trading style, right? And then once you get to that point, then I say you can start risking real capital in the market, because that right there is what's going to help your psychology by going into the market with a strategy that you have truly vetted. And like I said, if you're a person like me, that's going to be hard, because it was very hard for me to sit down, back up, and then vet one strategy. I called it the liquidity run reversal. Anybody that's been around here for a while, you will remember that name. The liquidity run reversal was my one strategy that I traded for a very long time. And it was so stringent, right? Once I started actually trading it live, it's like I was taking not many trades per week, right? Some weeks it would hit and I'll take like 4 trades in a week. Some weeks I would only take 2 trades in a week, right? But I was only looking for one thing. And while I was only looking for that one thing, I was on my grind trying to learn every freaking aspect of ICT concepts that I could, because it was killing me dead to be sitting there waiting on one thing to set up. My mind don't function like that. Especially when I'm studying the concepts and I know what price is about to do, but it's not my setup, right? That drives me crazy, right? Because my mind moved like this right here. But if you truly vet your strategy, you can engage the market, right? And that's going to help that psychological part of it, because you're not going into the realm of the unknown, right? You're not going to the realm of the unknown when it comes to your strategy, when it comes to your risk to reward, when it comes to why you pushing the buttons, right? If it's not your setup and price is running to the moon, you don't care, because it's not your setup. You don't see your setup, so you don't care that it's running to the moon, right? And then if that don't help you, I can't help you. It hit me. Looking at price this week, right? I see somebody say forced. I see somebody say I had to reuse your referral link earlier this month because I blew my funded account trading the NQ instead of the MNQ. Totally my fault, but it's okay. Clap it up. Clap it up for Rhonda for her honesty. Did I close Discord? I like when people are honest about what they do, right? Because sitting up there saying, ah man, the market this, ah man, the market that. Get over yourself. Get over yourself. Right? Market ain't did nothing to nobody. Right? Phil ain't did nothing to nobody. Right? You did it to yourself. You over leveraged. You broke a rule. You over traded. Right? You put on too much risk, which is over leveraging. Right? You did something. You did something. Right? And I ain't even gonna hold you. Right? I am gonna hold you. With prop firms, they allow you the ability to over leverage, right? That's how they make their money. You know why? Because they allow you the ability to over leverage. And because we're gonna get to the price. I'm running my mouth now. If you on a 50K account for most prop firms across the space, out of all the ones I ever seen, you're going to either have pretty much $2,000 is the norm across the board. $2,000 is all you can lose before you blow the account, right? Be it eval or be it funded or whatever, right? $2,000 gonna be all you got to before you blow the account. If you put $2,000 in your brokerage account, you can't put on 3 minis. Right? Some prop firms give you 3 minis. Most prop firms give you 5 minis on a 50K account. If you only have $2,000, you can't put on 3 minis, let alone 5 minis. Right? If you have $2,000 in your account, right, you can only put on 1 mini. Right? Because as soon as you put on 2 minis, right, if it go against you 1 point, it's going to margin call you, because now you don't have enough money in your account to sustain that position, right? So in the real world, you can't put on that many contracts if you only had $2,000 to lose. So they give you leverage, right? And so we go in and we over leverage because we have the ability to do so, right? Now, if you want to go the route of trading prop firms, right? Honestly, you don't have to trade the micro. You don't, right? You just have to have good risk management and only trade the setup that you have truly vetted. You got to have good risk management and only trade the setup that you have vetted. And you don't even have to trade the micro. All right. Why is that? Because let's do the math, right? Like I said, we're going to get to price in a minute if I really feel like it. But these are the conversations that need to be had far more than price went up and price went down. All right. I'm in the same boat. Hold up. I'm in the same boat in that aspect of my one strategy, but it kills me knowing it'll do a specific thing. Yeah, that's hard. That's hard, right? And the only way to get past that, if you're the type of person who, you know what I'm saying, that bothers you, you have to get to a point where you are more in tune with the price action, and so that you can take entries based off your discretion. Right now, that's not to say you just do anything willy-nilly, right? Y'all know when Michael say he got 81 PD arrays, right? Y'all, we hear him say it all the time. I got 81 PD arrays, right? A lot of people misunderstand exactly what he's saying, right? A lot of people are looking for 81 different PD arrays. They're looking for like something new, right? But there's nothing new about it, right? Like when you hear him say stuff like, this is my Modus PD array, this is my Venom PD array, this is my event horizon, this is my, all these other names that he's given, these aren't new PD arrays. These are entry models, right? These are entry models. But Tim, what do you mean? Because I think it's one of them. I think because when he be talking about all these new PD arrays, I don't even watch those videos. I don't look at them, right? I hear people talking about them, and I may go in and peek at to see what they talk about. But he had one, I think it was called Venom, I think, and he was just looking at implied fair value gaps at a certain time, like with a certain criteria with implied fair value gaps. And then he was talking about like Modus or something, and it was like a breaker. It had to be a breaker inside of a breaker inside a breaker, or a breaker inside of something, and it had this other name, right? I can't remember what it was called, but it was like a breaker in the premium of a order block or a break. Anyway, it's the same PD arrays, but it's a different entry model. So he has 81 different entry models that he can use, right? He's not looking at new PD arrays. He don't have a new PD array over here, a new PD array over there. He may call it a PD array, but if you look at what he's saying, it's just the same PD array from the PD array matrix, right? Just like everybody want to trade the unicorn model at one point in time, which is a order with a breaker in line with the fair value gap, right? But everybody want to trade the unicorn model, but he hasn't, I don't know of him given a true teaching on the unicorn model, right? I've heard him talk about the unicorn model, but he hasn't given a true teaching on the unicorn model, right? Until y'all remember, think back with me. Now, y'all remember a long time ago, right? Before he came out with a term, inversion fair value gap, right? What did I used to say? If you're above the PD array, you anticipate to be used as support. If you're below it, you anticipate it to be used as resistance. If you're above a bullish, you expect it to do its job. If you're below the bullish, you expect it to, you know what I'm saying, not let price through. Whatever, you know what I'm saying, above and below. Then when he came out with a term, inversion fair value gap, right? What did I say? I said it's the same thing we've been saying. If you're above it, expect it to do this. If you're below it, expect it to do that, right? Fast forward about 2 years later, right? Might have been about a year, but in like, I think it was 2023 or 2024 mentorship, when he was actually teaching how to use his PD arrays, like in the 2022 mentorship, the 2023 mentorship, the 2024 mentorship. He was actually teaching how to use the PD arrays. In one of those mentorships, he taught about the inversion fair value gap. Ever since then, what have I been sharing about inversion fair value gaps? Right? What have I been sharing about inversion? I never share anything specific about a fair value gap until he gave an actual teaching on fair value, on inversion fair value gaps. Right? When he first introduced Event Horizon, he only taught it in reference to new day and new week opening gaps. Right? I, in my own personal studies, I always said I'm grading the distance in between these gaps because a new week opening gap and a fair value gap, they're both gaps. So but I never came out and publicly said ICT said this. And then fast forward, he said any PD array in the distance in between any PD arrays, that's my event horizon. Right? But he be giving us stuff sometime and he want us to go see, he want to see if you're going to go figure it out. But I would never come out and teach on it or share my thoughts on like this is the gospel if he hasn't given an official teaching on it. Right? So if he don't give an official teaching on it, I may have stuff that I practice on my own, but I'm not going to say that this is a real thing. Okay. So back to the 81 PD arrays, back to the, you can't focus on one thing, right? You have to understand how price is delivered, right? And you have to create your own 81 PD arrays because he tells you this. He says, I'm not trying to force anybody to use one specific PD array. I'm giving it all to you so that you can go out and form your own entry models. But everybody just want him to give them an entry model. That's why everybody loved the 2022 mentorship because he just gave you an entry model. They think that's the best thing since sliced bread because he just gave you an entry model because we too lazy to go actually do the work and actually understand order flow and price delivery and actually say, okay, if price does this, then it should do that. And then you can come up with your own entry model, right? We did it in the Asian Assassins. Shout out Jim. It was during the Asian session. He gave us the name of an Asian dog, the Shiba Inu. That was the name of one of the models because it was a model for the Asian session and it had a specific criteria using the PD arrays that he taught. We wanted to see it do this, this, and this based off the PD arrays. And this is what we was going to enter. And that was the Shiba Inu model. That's all that right there. Shiba Inu. That's one of the gang's 81 PD arrays, the Shiba Inu, right? Somebody go put that on the internet and make $1 million. Why? Because people just want to have a fancy name stuck to they entry model. They just want a pattern to look for, right? That's why Casper got 42 videos talk about the same thing over and over and over. And Michael then came out like a couple times, was like, just like everything else you say, it's wrong. September 15th is coming. He's out of told you time and time again. When you have these imbalances like this, you don't trade off you don't trade off the one that broke the structure. You trade, I done told you this over and over. Everything you say is wrong. right? Hey, man, I just noticed I still got the calculator open. This is what I was going to talk about, man. So they give you $2,000, right? And give you then they give you $50,000 worth of leverage, right? So they give you $2,000 and then they give you $50,000 worth of leverage, right? This $50,000 worth of leverage, that's what gets us in trouble, right? When we're unsure about our strategy, that $50,000, that's what gets us in trouble. When we break our rules and then we're unsure that we can get that money back, that $50,000 is what gets us in trouble. I keep forgetting if I shake it, it's gonna make other stuff go down, right? If we, right, and then if you look here, right, there's some of that psychologist stuff. There's some of that psychologist stuff I was learning when I was going to school, right? Y'all see how I got the 50,000 over here in his little calculator, and I got the 2,000 over here in his big calculator, right? Because whenever you look at something, right, if it's bigger, it's important. If it's a different color, it's important, right? It's like that psychological warfare that they wage on us online and on TV and stuff like that, driving down the street. If it's bigger, it's gonna catch your attention. If it's brighter, it's gonna catch your attention. If it's a different color, it's gonna catch your attention because it stands out, right? So this 2,000 over here inside this big calculator, this is what's important. This is what you need to focus on right here. Focus on that right there, right? You focus on that 2,000, okay? And as long as you focus on that 2,000, you don't have to trade the micro. You don't have to trade the micro as long as you focus on that 2,000. All right? But Tim, why do you say that? What do you trade? What do you trade, Rhonda, the ES or the NQ? Is Rhonda in Zoom? No, she's not. Rhonda, you still in here? NQ, right? You trade the NQ, right? So with the NQ, with the mini, what did I just do? What is this back here? Oh. Why can't? But the haberdashers. Oh, I got that highlighted. No, that ain't it. Why won't he come to the front? Why won't this calculator come to the front? Let's start over. What's going on with my calculator, man? Yeah, see? Last time I calculated when it come to the front. What was up with that? I don't know what was going on with that right there. Tweaking for a second. All right, now. Okay. So with the come here. All right, so with the mini, it's $20 per point, right? The mini is $20 per point. If you got $2,000, right? And the mini is $20 per point divided by 20, right? That's 100 points. Give or take, think about commission. right? So think about commission. We're going to say with the average broker, average discount broker, round trip on the NQ is roughly $5, right? On average. Some of them less than 5, some of them a little more than 5. You know what I'm saying? With the average discount broker, like all of the prop firms and Ninja Trader and Apex, Ninja Trader, Top Step, all of them like $5. So we're gonna say 2,000 divided by 25, right? Because round trip on the trade, if you got one contract, that's gonna be no, I can't do that because I got to add the okay. All right, so we're gonna do 20,000. I mean 2,000 divided by 20, right? That's 100 points, right? Then we say, okay, 100 points, and let's just say for just say you did that over 10 trades, right? So then that's $50. So that means you got to take away that 150. So that's like, yeah, I'm complicating it for y'all, right? So we're gonna say 2,000, right? And we're gonna think about the number of trades, right? You say if I just did my absolute worst, right? I just did my absolute worst I could on any given day, right? I did my absolute worst I can on any given day. I spiraled out of control and I took how many trades, right? If you spiraled out of control and you on your absolute worst day, right? How many trades would you say would be like your absolute worst day and you just spiral out of control, Rhonda? How many trades did you take during this session if you just went crazy? Oh man, it's an AJ McClung. Oh my goodness. 5 divided by 5. That's $400 per trade. Hold on. Man, we blowing them out. Hey, we playing sim old school lump, and we blow lump ain't even in here no more. I said we blowing them out. We playing sim old school and we blowing them out already. Man, first quarter almost over. I got to get ready to get out of here, y'all. That's $400 per trade, right? Now, are you realistically gonna risk $400 per trade? That's way too much risk, right? It's 20 points, $20 per point. 400 divided by 20, you're risking 20 points per trade. If you're risking 20 points per trade on the NQ, right? I believe you're risking too much, but I'm not going to say, hey, you know what I'm saying? I believe you're risking too much. If you're risking 20 points per trade on the NQ, I believe you're risking too much. All right. But that's fine. Even if you're risking 20 points per trade, right? If you're risking 20 points per trade, as long as you're making 40 points per win, right? As long as you're making 40 points per win, then you're going to be okay. If you have truly vetted your process and you understand your model, you're going to be okay. Now, here's the key, right? We said that Rhonda said that on her absolute worst day, she spirals. She's taking 5 trades, going down a rabbit hole, taking 5 trades, then went down a rabbit hole. This is taught by Michael, straight out the core content. That's why I tell y'all core content is important, right? The first trade that Rhonda takes, right, is a 20-point stop loss, and she loses. So she down $400, right? She down $400 because she had a 20-point stop loss times 20. She down $400 plus the commission, right? So she down 405, right? She down 405. But we sticking with round numbers, making it easy. She down $400. Now, every time you lose, you cut your risk in half, right? Every time you lose, you cut your risk in half until you recoup what you lost. And then you go back to regular leverage, right? So if you're risking $400 per trade, right? And the reason why you're risking this $400 per trade is because that 20 trade stop loss is your comfort zone for your strategy, right? Then when you take that first loss, now the second trade, you're not going to open a trade with a 10-point stop loss. Nope. What, Tim? Why am I not going to do that? You said cut my risk in half, right? Now you have to move to the micro, trade 5 contracts with a 20-point stop loss, right? You trade 5 contracts with a 20-point stop loss. Now, right? Come over here, right? So with the micro, right, it's $2 per point, right, times 20 points times 5 contracts. It's $200 in risk, right? So you cut your risk in half, right? You cut your risk in half, and you got your same stop loss because that's per your strategy. Per your strategy, that 20-point stop loss is your comfort zone for your strategy. That's what works with your strategy. When you win and when you lose, you win based off a 20-point stop loss. And we just doing it like that because that's the amount of money we said was her spiral day. And that spiral day, right? With 5, if you trade the same leverage 5 times, you just blew the account. Okay. Now, you take another loss. All right. Uh-oh. I'm on the wrong calculator. You're down $600. Way A, when you're going with the same leverage, you're down $800 with way A, using the same leverage, same risk, right? Way B, cut your risk in half when you lose, right? Cut your risk in half when you lose. You only down $600 after 2 losses, right? Now, right, you see your setup again. Well, even if you spiraling out of control, right? You cut your risk in half, right? You cut your risk in half. Now, you've already moved to the micro, right? You've moved to the micro, and now, instead of putting on 5 contracts, you can't put on 2.5 contracts, right? You can't put 2.5 contracts on, right? So guess what? You can only put on 2, right? Because you're not gonna adjust your stop, because your stop is the 20-point stop that works with your trading strategy, right? So now you got $2, right, times 20 times 2 contracts. Now you're risking $80, right? You can't cut it in half to 100, right? Because you can't get 2.5 contracts, right? So now you're risking $80, right? You take a third loss. Now you're down $680 with 3 losses on the day, right? 3 losses on the day, you're down $680. If you risk the same leverage on all 3 trades, you'll be down $1,200. Over half your account gone the way one, right? But when you reduce your risk, because you reduce in half every time you lose, you're only down $680 with 3 losses in a row, right? At this point here, right? Let's just say you give yourself 3 trades a day, right? By cutting your risk in half every time you take a loss, right? You would only be down $680. And you're coming in the next day with, what's that? 12, 13. My math ain't math.
1320.
1320, right? You coming in the next day with 1320, whereas you would be coming in the next day with $800, right? So now you got 1320 coming in the next day, right? And then this way over here, you only got $800 coming in. Okay. You say, all right, today ain't my day. I'm cutting it off, right? I'm stopping right there. But even if you spiraled all the way up to 5 losses, right, and cutting your risk in half, even if you spiraled all the way to your 5 loss place spot, you would not blow the account in one day. You would not blow the account in one day, right? Because now you cut it in half again here. All you can do is trade 1 micro with a 20-point stop loss. That's $40, right? Because you're cutting it in half. Every time you lose, you're cutting your risk in half. You would not blow the account in one day just by cutting your risk in half every time you take a loss. And then if you're disciplined enough to come back the next day, right, and start at whatever level you was at with your risk management, right, it will be almost impossible to blow this account. Now, if you come back the next, if we come back in and we down 680, and then you just jump back in the next day and go right back to 1 minute risking 20 points, right? you're not following your own rule because you haven't recouped. You haven't recouped that $680 yet. So you can't go back to full leverage yet because you ain't recouped it yet. You can't go back to full leverage. So the next day when you come in, right? The next day when you come in, where we at? Was we at the 2 micros? I think we was at the 2 micros. I can't remember where we was at. So wherever you was at, when you come in the next day, right? You start trading there, right? Start trading at the 2 micros. Okay. Then you start trading at the 2 micros. And then when you get half of that back, like if you just take a trade and you only make like, you make enough to get half of that back, right? You take one trade and that trade pan out using 2 micros, right? And you make the trade is successful enough to get half of this back, right? Trade successful enough to get half of that back, right? Now you, instead of risking 80, right? You go up to the you double that right there. Now you go to 160. You risking 160, right? You double that. So now, because you got half of this back, so now you double that back to you're risking 160 because you got half of your drawdown back, right? And then it's 340, right? And then let's just say you go in there and you're doing 2 times, I mean, was it 2 times 20, right? That's your stop loss times 4, right? 160, right? And then let's just say you get a 50-point trade, right? You risking 20 and you get a 50-point trade because you trying to get at least 40 because you're doing at least 2 to 1, right? But let's just say you get a 50-point trade, right? So let's just say you get a 50-point trade, just easy math, right? So we go 50 times 2 times 4, $400, right? So now what have you just done, right? Minus 4. You got $400. Now what have you just done? Minus 400. You $60 in the green now with 2 trades, right? The first trade, you got half of it back, right? And then you went from risking $80 to $160. You double the risk wherever you left off at, right? You doubled it back, right? And then in them 2 trades, now you're back in the green. Now that you're back in the green, right? What can you do now? You recouped your drawdown. Now you can go back to 1 mini risking 20 points, right? You can go to 1 mini risking 20 points. And now what does that do? Now you ain't doing all this in the same day, right? You ain't doing all this in the same day. Okay. So when you put on that first trade, right? And let's just say, let me see. 340 divided by 80. No. 340 divided by 80. That's 4.25 times 20. That was an 85-point trade the first time. Because 85 times 2 times 2. Yeah. So that was an 85-point trade the first time. So the first time when you had the 2 micros and you got half of your drawdown back, that was an 85-point trade, right? You done for the day. You're not going to keep trading that day. Okay, you recouped half of your drawdown. Then the next day you come back, right? That's when now you say, okay, I got half my drawdown back, right? Now I'm gonna double the risk that I was using yesterday in my reduced risk because I got half my drawdown back. So now I'm giving myself more leverage, right? So you go from 80 to 160. That's 4 contracts with a 20-point stop loss in this case right here. Then on this day, you hit a 50-point trade. Now you're $60 in the green, right? You're not trading no more that day. Then the next day you come back. It ain't got to be the very next day, but the next day you see your setup. Let me put it like that. The next day you see your setup, now you're back to full leverage. And you have the confidence of having a very bad day without blowing your account, coming back on another day and having a good day, recouping half of your drawdown, coming back on another day, having a good day, recouping all of your drawdown and coming out of drawdown, but you did it without over leveraging. So now your confidence is built up in your strategy. You're thinking better. You're acting better. You're making better decisions, right? Because you have the confidence and the knowledge that my strategy works. I'm in a good mood because I'm seeing the charts right. I'm aware of what I'm seeing. I'm not wondering if I'm going to blow my account. I know I'm not going to blow my account because I'm managing my risk accordingly, right? And now I can go back to full leverage, and I've dug my way out of drawdown. That's why I say you don't have to just only trade the micros if you got strict risk management, right? You can trade the mini, but if you're risking a lot, you may have to go to the micro to manage your risk. My wife sent me a picture of the game, and the first quarter was almost over. So I'm getting ready to go because I know the second quarter probably almost done, and I got to get there for halftime. I know we ain't go over price. I jollipies for that, but if y'all don't mind, we're gonna call it here. Even if you do mind, I really don't care. But since y'all been such good sports, tomorrow after we do our Q&A with the Smart Money Manuscript, I'll do a price action recap tomorrow after the Smart Money Manuscript Q&A. Right? So be checking your YouTube notifications anytime after 11, because if ain't nobody got no questions in the Smart Money Manuscript, I'll probably just go straight over to YouTube. If they got questions in the Smart Money Manuscript, then I'll answer the questions and then I'll go over to YouTube. But yeah, be checking out for your YouTube notifications, and then I'll post it, and then I won't just jump straight on. I'll post it and give you like a 30-minute window, right? Give you a 30-minute window. If we go in there and we ain't got no questions, I'll put up something and it'll probably say y'all pull up at 11:45. Or if I go in there and they got questions, I might post something and say y'all pull up at 12:30. But I give you like a 30-minute window because people be saying they don't get their notifications. Hey, I hope y'all oh, that was Venom. I hope y'all got something out of this. If you didn't get nothing out of it, hey, I'll try my best the next time. But until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action, it's your boy, Timothy Leroy Sr., aka Aranya Grande. That's just Big Spot if you don't hablo español. Y'all be safe out in these trading streets, man. Gone.